Isabelle, we also heard that Turkey's central bank actually allowed exporters to repay some of the foreign exchange debt in liras for the next 2 months. That helped support lira a little bit. What more can they do?
I'm not sure there's a whole lot they can do. I mean, of course, raising interest rates tends to work in emerging market crises of this type, but it's often resisted for too long for understandable reasons, for fear of choking off growth, etc. But frankly, they don't have too many options at this point. And don't forget, there's elections coming up. That's also not going to be supportive for the lira, because people are going to want to wait and see what happens. Now, I don't think there's great deal of risk of surprise in terms of who's going to win, but I think the margin of victory could create some further turmoil. So I think investors are going to be quite cautious before going back into Turkey and feeling comfortable about the level of the lira.
Yeah, it could be interesting to see how the parliamentary vote goes.
Exactly.
Let's talk a little bit about what else can be done. So we've just been talking about the oil price. If that rolls over, I've got the Brent in Turkish lira here. It's gone up quite a lot because of this dollar factor. So that's one element of it. You've got a current account story more broadly, but then you've got the kind of structural reform story within Turkey. The interest rate story feels like a sticking plaster at this point. What needs to happen more broadly?
Well, more broadly, Turkey has a large current account deficit and has been going on a bit of a borrowing binge in foreign currency, and now it needs to rein that in. And unfortunately, that means probably slowing growth. Now, of course, it's always good to do structural reforms, but that's not a structural reforms crisis that it's facing. It's,
it's an exuberance crisis.
It's markets have been, frankly, a bit complacent with these two countries, Turkey and Argentina, that had very large twin deficits, and now interest rates are rising and the dollar is rising, and all of a sudden people are realizing, oops, yes, they're growing, but this is actually not sustainable. So they have to change course, and they're going to have to rein in this foreign borrowing if they want to be able to repay it.